Traders, the gold bubble is going to crash. I know I just set off a whole bunch of fireworks in the chat box already in the first few seconds of this video. Hello everybody, welcome to another amazing week in these markets here. Guys, every time I'm looking at the markets as a whole, I'm using this worksheet cheat sheet to see, okay, where's gold right now? What am I seeing in the comment section below? Where's the crypto market right now? Where is the stock market right now? And I'm always gauging this parameter here because there's the psychology of these markets, right? The psychology of these markets is that one of the hardest things anyway is that if you're new to the markets, the psychology is that when you're seeing a lot of people scream fire, 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 you need to run for the exits now. It's probably a good time to actually enter that building, if you know what I'm trying to say there. It's meaning like, this is one of the reasons the average person on a psychology levels doesn't understand the psychology of trading or understand the psychology of money or psychology of these markets. And that is because when most people are fearful, it's time to be greedy in the markets. And the reason why I'm bringing this up here is because I want to start off with a good old gold market from here with you guys. And looking at this thing here, I am seeing so much, and I know I'm going to get some hate from this here, guys, but what I'm about to say right now is for traders. People that are not in gold right now, and you're looking to get into gold, I'm telling you right now, when you look at a percentage, right, because everything's about what will be the success rate if I got into gold right now. You're probably going to have a good maybe 20% success rate of a trade doing really well for you right now. Because we never know when gold is going to top, right? When is gold going to top? And we don't know. But one thing I'm always looking at here when it comes to the markets is I am seeing so many people, and I'm actually getting this euphoria right now. I am a genius. We're all going to get rich. I spoke to one lady today, or last week, should I say? Last week? Maybe the week before. I spoke to one lady on the week before. And when I spoke to her, this is when I know where we are right now in gold, right? She said she's been trading for 4 months. 4 months. And her $100,000 trading account is now up almost $40,000 in the last 4 months trading gold. What do you think that means? Now, I have no dog in the bone in the fight, okay, in this thing here. I'm just here to try to help you when it comes to trading purposes. Long-term investing, I do see there's probably going to be a really big crash coming soon. When we do go through a recession, everything tends to go down, right? Everything tends to go down. Why? Because if stock market portfolio is coming down, they're going to sell some of their gold to actually keep some of their stock portfolio, right? So they both come down. But I eventually see gold being 10,000, but we will go through these cycles. So that's for trading purposes. Now, if you're a long-term investor, a long-term investor goes through the motions. You don't sell. If you're a long-term investor in gold and you believe we're going to get to 10,000 over the next 5 to 10 years, you don't sell. You just, okay, it's going to go down, it's going to go up. We may get a 30% drop in the markets. We may not. You just buy and hold. But if you're a trader of the markets, right now, there's so much euphoria out there right now. And this is when people get their face ripped off big time. And the reason I'm doing this right now, guys, because I'm starting to see massive warnings, not only from a comment section in my comment section below, but I'm starting to see it from, as I talked about before, from speaking to someone who's been involved with these markets now for 4 months. And guess what? I've already made $40,000. So, and then I use this thing here to look at where the stock market is right now, right? So I'm using the psychology and what's happening right now around the stock market. It's like, are we down the bottom here at anger? Are we down the bottom here at disbelief? It's like, where are we in the psychology of things? And as you can see, there's so much fear in the stock market. That's why I'm being so bullish this last week or so. Like, get ready for a bounce. Now it's taking its time, I understand, right? And if we have a look at this level here, and we have a look at the good old fear and greed index, guess where we're still at? Where are we still at? Right? And what always happens, again, guys, this is where, like, looking at probability of these markets working, And the way they work is, look where we're at right now, right? We're still down the bottom here. What has happened in the last 12 months when we've gotten down this far here? We may spend a bit of time down here, but what inevitably comes? A move to the upside. What is that? This has gone now from extreme fear, where we are now, and we end up coming all the way down and we start to get into greed. What's going to cause that greed? The market's probably going to rise. And it's just, you can just see it time and time and time again. So on a short term, this is over the last 12 months, every time there's been maximum fear, and fear in the markets, we are seeing that. Now, if you use this from a gold perspective, and I wonder if there's a, let's actually gold, fear and greed index. Is there a gold fear and greed index? Let's actually see if there's a gold fear and greed index. I guarantee you that's it's actually greed, right? Yeah. Okay, cool. So I'm looking at that right now. We're at greed. I'm surprised we're not at extreme greed. But anyway, we're getting very, very close to the extreme greed anyway. So I'm just looking at another screen. Anyway, what I was looking at was this level here. So I'm not sure. I've never really used this page here before, but we're at greed. And so therefore, guys, if you want the best opportunities to do really well in the markets, guess what? Just, if you're looking to buy something, just go where there's a lot of fear, right? Go where there's a lot of fear. And if you did that, you're probably going to do, and you did say, if you did that and you bought 10 investments, probably 6 or 7 of them are going to do really well, and 2 or 3 of them are going to do really, really well in that period of time, right? So we see that through there. So let's go look at the actual chart itself, and we can see just how much gold has actually spent to the upside. Now again, guys, I don't hate gold. I'm just trying to help you have a longevity in the markets, and I want to make sure that you're trading this market in a way of, okay, how do these markets work? And if we just looked at the way gold actually works, not what we hope and see, is I use a 24 moving average on the weekly charts, right? A 24. And what happens when we start to get too far away from the moving average? Too far away. What ends up happening every single, and where we are right now, what happens every single time? We end up what? We end up going through a pullback, a drop, or at least a sideways phase to wait for the moving average comes up. Look where we are right now, up here. See how far we are? Now again, guys, you can say this time's different, and Russia's buying right, and and the central banks are buying right now. Like, don't fall into that trap. If you're believing that is absolutely just rubbish right now, right? Because the central banks have been buying for years and years, not just right now. And you see this is how markets work, all right? So my warning here is for traders who are looking to get into gold, or if you're in gold right now and you bought in the last few weeks to maybe a month or so, and you've been riding high and you're the legend, buy some put options for protection if you bought it, put some stop losses in place so you can't actually lose that, okay? Because guess what's coming soon? It's written all over the place. So much greed, and we're so far away from the moving average, which is just one simple technique. And if we just look at history of the way these markets work, when we get too far away from the moving average, it's now overbought. And there's so much greed, we want to run away from that thing there. So that's what I'm seeing there when it comes to the good old gold market there, guys. And that's one of the things I really want to sort of stress home with you guys. Again, you guys can do what you want to do, but me, I'm all about trying to teach you the techniques about how do I apply the techniques that's going to work most of the time, so I can actually be in this market for the next 5-10 years, not just be lucky every now and then, but have a good solid concrete plan. And that's what I have with my coaching program, right? I give you the solid concrete plan. I give you the exact pattern, the systems, the scans, to scan the market, to find the trades. I coach you every single week, so I'm helping you through the emotions, trade selection, trade management, let the profits run, cut the losses short, right? And then I'm there every day as well too. So if you want to get access to that coaching program, guys, you can apply for it. First, or that second link in the description, go to getjohnshelp.com. And when you go over there, go apply for it right now, because I'm going to be taking that down soon and focusing for the rest of the year on those on the inside of the inner circle. So if you want to get access to this, guys, this may be one of your last chances to actually do this, because I do actually focus for the rest of the year those on the inside. So go apply for that right now, guys. So let's go look at the actual stock market, and you see where I'm at right now when it comes to the actual stock market. Let's go look at the Dow Jones. And where are we with the Dow Jones? Now, The same thing for the Dow Jones, right? I use a 24 moving average on my weekly charts, and I use a 52 moving average on my daily charts, okay? And I also use a 24 moving average on the daily charts, but, oh geez, I'm burping all over the place here. Now, actually, let's do this here. So, I'll bring this up here, right? If I squeeze my charts up here, what do you also notice about the markets, right? So the flip's upside down. You also notice what? The Dow Jones, very rarely will we get too far away from the moving average before what? Before it starts to become oversold, and now we come back at least to it, right? That's why I'm calling for a little bit of rally here. Now, if we do have a bit more to the downside here, just understand where we are. If we do this here and this here, look how far now, look at here, look how far away we are from the moving average. This is probably, if that happened over the next couple of days, oh my goodness, that's like COVID low. And then, woof, here we go, V-bottom, 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 V-bottom. So there's so many things that are screaming at least a short-term rebound. Now, when I say short-term rebound, this is what I'm talking about here, okay? When I'm talking about short-term rebound, I'm talking about like if we come down through here, we're going to get at least a short-term rebound up to this level up here. Then we can reassess what that does. Does it hold there and roll over, or do we just go up through there, right? Because if I'm looking at that level through there, same for the NASDAQ as well too. We've already had a very big leg down, okay? And once again, the structure and flow of these markets is that we never just go straight down. Even if we start to form a big top like this level here and we start to go through a bit of a movement on the downside, how does that movement on the downside actually form? We go down, right? And then we rally. This here is about 2, 3, maybe even 4 weeks of a rally to the upside. Then we come down and we continue down through here. So even though we do get this period through here when we actually bam, 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 bam on the downside, this is where if you're just focusing on the market coming down, market coming down, market coming down, market coming down, understand, guys, that a market, a bear market, a crash, a recession is lower highs. A lower high is formed by the market going down for a little bit, aka right now, and then we have to rally like we did here to create the lower high if it is going to be a lower high. That's where on the short-term level, the fear, maximum distance away from the moving average, we've had a very big leg down. There's a massive probability we're likely to at least get a rally over the next few weeks. Everything's lining up for that rally to come. Maximum fear or extreme fear, we're too far away from the moving average. We're not in a downward trend. The market's not just going to go straight down, right? Because as you can see, how big tops form is if this is going to be the top, it'll do something like this level here. And once again, this level here, as you can see, from that there to that there, what was that? That was about 21 days. So 3 weeks of an upward movement first, then we rolled over into more of a downward trend. That's what we're likely to get in the top of the market. All right, the market doesn't just go straight down, and the same for the that's the NASDAQ, and the same for the S&P. Now the S&P for me, guys, is guess what? The same thing for the S&P 500 is what I'm looking at is I actually have a target of 7,000. I'm not going to go into details here. This is just a market update, but I have a target of 7,000. So if you guys are thinking that the top's in right now, I personally don't believe that, right? I have 7,000 through here. When it comes down to, I've actually got, so 7,000. That's where I see this thing coming. I just see this being a nice, good, strong, healthy freak out. And as you can see, traders, what tends to happen is these freakouts through here, as you can see, what I'll call it a freak out, they happen at least once a year. And people that are not used to this, they're freaking out right now about this drop in the market. So even if we do get a little bit more downside to come, even on from the S&P, look how far we're already away from the moving average. And look what happens every time we get too far away. Even the COVID, which was a black swan event, look at that, too far away and then snap back right back to it, right? Every time in history that happens, when we get too far away from it, we're oversold. We're likely to get at least a bit of a snapback, a rally for the moving average, my 52, and the market to come back and kiss each other, right? Just like the... actually, I won't go there, right? So we can see that's what's happening through there when it comes to the good old stock market from here. One of the big markets that I am really watching for when on moving on the downside, and that is, let me bring this up to here. Oh, by the way, does anyone know anything about this stock here? EGR. It's on the Aussie market. My mate just sent me he just sent me a message saying, John, what should I do with this stock? Yeah, so if anyone's got any clues about this particular stock here, I don't know anything about this stock. I'm just looking at the charts. Just let me know there. Anyway, so back onto the oil market. And once again, oil is actually operating in the same way that I saw happening, right? So for a while now, I've been saying oil crash, but first bounce come. Oil crash, but first bounce come. And what's happening right now? We're actually in a very big downward movement from here, but first bounce come. What does that mean? And this is where, guys, whenever you're trying to get into the market, ask yourself what's already happened, right? Because how does the market work, right? We go down for a bit and then we rally. We go down. See how we do that, right? Unfortunately, and this happens all the time, you see this market come down, 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 and then people try to short it down here. And they're wondering why we're starting to get a little bit, because you see what I'm saying here, right? So if you're looking to get into a market, if you're looking to short a market and we've been going down for a few weeks or more, that's the worst time to get involved with it. Why? Because we're probably going to go through one of these and one of these. That's the worst time to be getting involved with the markets, right? And that's the reason why most people, they get chopped up, right? And then if you're looking to buy the market, if the market's going up for 2 or 3 weeks or more and we're doing that, guess what? That's the worst time to buy the market, right? Worst time to, especially for trading purposes. Why? Because how do markets work? We go up for a bit and then inevitably what? We get the pullback and we go up. This is just what happens through here, right? Every time we get a big spike, we get a drop. Big spike and we get a drop. So if you're looking to buy the market, get into a trade, understand how these markets operate, all right? And that simply means if the market's been going up for quite some time, that's the worst time to get involved with it is at that time. Why? Because we're near the end of that move and we're probably going to get the swings. Unfortunately, I'm seeing so many people that have been trading, I'd say less than 5 years, they're doing this. I saw this one just recently, right? Someone shorted oil and it's just like, so yeah. So anyway, the reason why I'm saying there's a bounce coming out of oil, it's nothing special apart from when we just see how markets actually zigzag like this, up and down, up and down. We've been going down, 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 down. It's like if this was me breathing out, right? If this was me breathing out through here, right? If this is breathing out, breathing in, breathing out, breathing in, right? If this is me breathing out, breathing out. You see that through there, right? You're about to run out of oxygen down here. You don't go short down here. Or actually, because anything can happen, right? And the hard thing about what I just said there, traders, is this. There's always that 10% of time that the market does happen. And again, I want you to be around 10 years from now, right? So we want to be able to do things that gives us the probability of doing well for the next 10 years. We want to have a successful year this year, not a successful week or successful month, right? We want to have a successful year. And how do we do that? We've got to have good foundational, even approaches about stuff that I'm talking about here and now on the market here. And that's what I'm looking at from there, guys, when it comes to, the markets from here. And even if I go down to like the energy sector, right? The energy sector is doing what? Look at this energy sector. Oh man, if the energy sector really starts to roll over here, look at this major top here. This is the weekly chart here. But check out this guy. This is just BEA. Oh, potentially beautiful, right? This could be forming a massive, massive, massive rounding top. And 1, 2, 3, potentially even 4 years to generate this massive top in the markets. And if it is a top, get ready for one of the greatest shorting opportunities you've seen this year.